What's up, guys? Dakota back with another video, another weekly trading review. This week going to be reviewing 2022 July 24th through the 29th, and I'm actually excited to review this. Really excited to review this because something really cool happened this week that I was excited just to get to the review. Like as soon as as soon as the trade ended, I was like, I can't wait to review this. Because it was awesome. But obviously, I got to see, which is the second to lowest grade that I could get. So it's pretty bad week though, performance wise. As far as the actual stats go, got a 2.8 R multiple and a 1.16% gain. Now the reason I'm actually going through and reviewing it on Obsidian instead of reviewing it on the PDF like I usually do is because there's a lot of references made in this particular review, so I want to be able to go to them pretty quickly instead of bringing up different programs all at the same time, right? So this is just going to make it easier, and I probably will do it this way from now on if it turns out to be that easy, or if I actually end up liking it, right? So let's go to Monday. It doesn't matter which side. Limit activated on AUD/JPY. I cut the limit initially on the initial AJ position for a small 0.5 R loss. I did this because price was consolidating around my entry area where I like to see aggressive rejection. Price also failed the FTA of this position since the shooting star setup had not been initiated and I was preempting the higher time frame. This setup should be an H1 inverse play without a higher time frame bias. This means I should be closing on failure of first trouble area levels. Did I not do that? Oh yeah, I didn't. That's why I made that note. So let's go ahead and bring this up. Show in default app. Okay, so this is the trade. It was a limit overnight. If we go ahead and actually look at the notes that I made on when I was playing this trade, it says as soon as the market opens, I'll be placing a limit at that level. Stop loss will be 95.39 and instead of 94.99 because it is my goal to ensure I'm giving my trades plenty. Yeah. So the initial position of the stop here typically would be above this candle, but I'm intentionally working on giving my trades more room to breathe because of the possibility of them ranging within that. After my limit entries, I've gotten stopped out pretty quickly because of that. So that's been the focus of the last 2 weeks, and was able to do that here as well. Base this one off of that, and worked out for me in this scenario. So pretty good on that limit. Last opry break. I see. Yeah. Okay. So this is where it would have been, and I set it up a little bit higher there. Okay, and this is how the trade ended up. I ended up closing here, and where I should have closed initially is right here at this level, on the screen level. That's the first trouble area. First area after the entry area where there's basically support, right? Where price could potentially reject. Now price did stay under the stop loss for a while, and we'll see that later on. But ultimately ended up hitting stop, but I could have cut the trade a little bit earlier. So let's go to the next trade. I then added a position. I entered back into the position with a real amateur type of thinking process. These type of reviews just show me how many mistakes I actually make, right? Because when I'm actually trading and without doing when I used to trade without doing reviews, I wouldn't notice my mistakes. I'll be like, oh, I had a great week. I followed all my rules this week. But when I'm actually tracking every single thing that I'm doing, I'm seeing just how many mistakes I'm actually end up making the other week. I added the position back on, right? And re-edit plan and create more clarity around. Yeah, so I just wanted to be clear around my plan. Like, what am I willing to do? I may be giving myself a little bit too much freedom in the positions I'm putting on. We'll go ahead and look at this too. Is it really worth it? We'll do it. Yep. let's see. Yeah, so I re-entered after price failed this level again, the area that it was initially rejecting. It gave me a higher R for what I was initially looking for, and I set my target down to the just the next hourly level because the aggressive rejection didn't happen off of my limit position. My faith kind of deteriorated in this position. And looking at this now, this actually reminds me of a trade that I took later this week, which was, what pair was that? That was Euro AUD. Like this same price movement in the same thing, the limit order. Not the same situation. This one was a weekly shooting star, like preempting a weekly shooting star, looking for this level to be broken below, and just trying to get a head start on that break below. But I was definitely looking for this to go short, and yeah, so major rejection here. Price rejects the first area. That didn't exactly happen on your AD. But yeah, it doesn't really break to the downside. There wasn't a strong rejection after entry, and then price scales up, trying to test this area again, and then it continues pushing up. That's interesting. Yeah, that's really interesting actually. Okay. Okay, let's continue. I lost just about half an R on both those position combines. I lost 1 R. All right, next, let's continue looking at the right side. Let's minimize this because we're not really going to be paying too much attention to that. Okay, Euro USD. So Euro USD, I remember from the previous weeks, I've been looking for a sell. I don't think I've actually made reference to it. I've been looking for a sell since the 11th. But it's because we're on the weekly, right? So I'm looking for the parity to be tested again and actually be taken out. Yeah, that's all I'll say about that. But basically I have a downtrend. Price been on a downtrend since last year, and looking for this retracement to test 1.03401. In order for that test to actually happen, I need to see price push up. So that was like, okay, if we're going to get that test at that level, I'm going to be looking for buys on my lower time frame as I'm waiting for my limit to be activated for the sell to the downside. So that's kind of redundant. I initially placed stop under entry candle as I was supposed to on the JCP setup. Okay, so let's go ahead and break this down. So there was actually a quick flaw that I made here. Usually with my JCP setups, like I've talked about before, I place my stop right underneath the entry candle, right? Which the ideal entry candle for me here was this level. It's right on the hourly level. It's in confluence with the 50 Fibonacci level. It's nice little support area, right? So that's my prime entry there, right? Now I noticed after I had entered and put my stop there, I noticed, oh, there's like a level right here, which is right where my stop was, that price could just wick out and take me out at. That's not a good stop placement, so I should widen my stop in this situation. I should give the price a little bit more room to breathe in this situation, which is something that I'm intentionally working on. Now, when it comes to JCP, it's very mechanical. It's not discretionary when it comes to the stop placements. In this situation, I made room for that adjustment, which I'm happy with. I have like no complaints on that because logically it just doesn't make sense to put my stop right there if it's right inside of a level, right? So I'm gonna have to make that edit on the JCP side. On my DSS, on my other strategy, I continue to do the same thing. Like that stop movement in my other strategy is way more logical, at least to me, than just strictly keeping it mechanical in this way. Like just putting it below here, and I would have to, as I go back through and adjust my trading plan again, or make a new edit of it, I'll have to make certain criteria for placing my stop just below that, because this can stop me out a lot, and I need to make sure it's the right circumstances in order to actually make that placement. Okay, so in the situation, I had my stop here. I went ahead, took partials on the positions, and said, okay, if I move my stop here, what would my risk be? And I just made the adjustment, took some off, and that's what that first loser is for Euro AUD, and put my stop underneath this thrust candle of that zone that I'm looking at. If you don't really see the zone, let's go ahead and draw markup. Can I draw a rectangle? No. Yeah, okay, that'll be fine. So zone I'm talking about stretches from here to about here, right? And we're looking at that in this area, right? So right in that zone, I don't want my stop to be right inside of it. I want it to be outside of it, below it, right? And below this candle allows me that that type of placement that I'm looking for, right? So that's why I got a minus 0.16 R, I believe, yeah. And the actual trade here, we'll go ahead and talk about the limit that I reference here. So the limit here that I had last week was right at this level. All right, limit right there is in perfect confluence with the 50 fib level. My stop in that situation, I don't exactly remember, but if I set it below here, like I probably would have set it below there, like at my first look here. Minor, yeah, I don't think I would have set it below here. I probably set it here. I'll have to go back and look at my screenshots or my notes for that. But yeah, that's where my limit was, and that's where price came down to, and price ended up going a little bit lower than this level here. Now for this actual trade, since I don't have a higher time frame bias, this is a daily impulse correction flag for me, but there's no significant daily bias. It doesn't have the structure of the daily bias that I'm looking for on that JCP setup. So in this situation, I'm looking for a first trouble area, first support resistance area, where if we get failure there, I'm cutting, which got failure here. See, price broke through it and failed to close through that level, actually twice, and I ended up cutting that position for a small winner. Now, the night before in my review, I actually said, okay, if I get wicked out overnight, I'm confident enough to actually re-enter this position, because in order for my weekly setup to occur, the weekly sell that I'm eyeing at 1.034, this needs to push up and break beyond this daily level here, right? Which it hasn't even done that yet on even at the end of the week. Yes, we're still below there, so there's still there's possible opportunity here. Oh yes, there's possible opportunity here. I think I just found a key pair for next week. All right, so so anyway, here after the stop out, price comes back down here and makes a lower low, which is good for me on the JCP setup, right? And still reacting within this broad range, because JCP is about general areas, not necessarily being exact. In most cases, it's about if it's in a zone, okay, this is where buying pressure is. There's not too much preciseness when it comes to that. As long as it's in that area, and we have a bullish candle, a sign of bullish activity, I'm good to enter that position, right? So this would have been an opportunity for me to actually enter this position, and in this scenario, that's where I would put my stop under that level, and my target would be at this high, right? Now, honestly, at the end of the week, I probably would have cut a small loser if I had taken that position that way, but I just didn't come back here. I wasn't convicted to come back here because my focus shifted to, this is 27th, right? My focus shifted back to dollar Swiss, which I was kind of stressing over. Unfortunately, again, very amateur week for me. Okay, and then this one was actually a good trade. Let's read it first. Basic JCP setup off key H1 level G2 with 61.8 fib confluence. Good trade, but I could have given the position more room to breathe with a thrust candle placement stop. Okay, this situation, I did have a thrust candle placement stop, but I didn't pay attention to the other areas around it. Right. As far as this trade goes, I adjusted it with JCP on my stop, which completely happy with. I have no complaints about this trade. I executed this trade. I mean, like I should. So really good. Just took a loss on it, and the idea actually ended up working out. Just wasn't the right timing for me, right? So let's go read this. I see that entry was based off TC instead of entry candle because 3 Black Crows 15-minute entry did not have an exhaustive candle on the H1 time frame. So I went for thrust candle placement. Since we're here and we have this edit up, I see entry is based on thrust candle instead of entry candle because in this situation, if I'm using thrust candle SL placement, I will use all rules for the thrust candle, right? So I was like I said, wasn't analyzing as if I was using the thrust candle method that I have. Although closure would probably still occur, I could have adjusted stop below or above last low pre-breakout, pre-breakdown, thrust candle 137.638. Reason for exit: inappropriate price action following high impact news for setup. Position was identified the day of and taken without full map. JCP on H1, level G2. Okay, just re-enter. All right, so actually, I saw the setup in the morning. It came right to a. Okay, it came right to an hourly level with 61.8 fib confluence, and I placed my stop above this level. Right, this was all good for me. On 15-minute, we got our entry signal. But on the hourly, didn't get an exhaustive candle. All right, so that's where I had to adjust my stop to say put it above here instead of placing it just above this high here. Okay, so it wasn't actually high impact news. It was durable goods that came out in bullish price action here. And actually on this candle, since we got that bullish, this is a bullish candle to me, right? Not just because it's a green, but this is telling me that bulls are in control of this candle, or we're in control within this hour. So I'm looking for price to push up in this point and possibly equal out these highs in the situation. But this was right at this level, right? Yeah. So that price action at this specific level within the zone, it wasn't good for me. So I was like, okay, I'm going to cut this as a small loser. We don't have exhaustion on the 1 hour time frame, so I'm not really looking to hold that too much. So I went ahead and closed it in this area, I believe on this candle close, because it just wasn't breaking down for me. And I did for JCP and just like DSS, I like to see immediate push away from my entry level, or as immediate as possible. Right? I don't like price to chill out in that area, because I haven't seen that work out too often. Sometimes it does, sometimes it doesn't. Okay, now the trade that I really want to get to, that I'm excited to review, is dollar Swiss. This trade is awesome. It's gonna be kind of complex because there's an advanced concept that I'll talk about in here, but I mean, some people won't recognize that's too advanced, honestly, because it's honestly simple once you get the hang of it. But I love this. It just shows me the opportunity that's out there that I can take advantage of, and with reduced risk, right? So it's got me more excited, right? And actually need to lower my risk a little bit more, or I plan to lower my risk a little bit more, to 0.3 instead of 0.5, just for longevity of the account. So dollar Swiss, I actually took these 3 positions that I'm going to be talking about, or these next 3 positions. I took them the week before, right? And have been scaling into the position. So let's go ahead and read, and I'll bring up the screenshots. Let's bring up the execution first, and then we'll bring up the observation after, and also daily, because daily is important here. All right. So dollar Swiss was closed after close above. I closed the position after it closed above the trend line. 1 hour, it was actually 2 to 3 hours before the FOMC statement was released. This is not a valid early exit for me, since I intentionally removed this from my plan in late 2021. After I reviewed my journal of 2021, I stopped closing positions just because price broke a trend line, right? Because there were so many big winners that I got cut out early because of that rule that I had, where if that trend line breaks, I go ahead and cut my position. A lot there are a lot of positions that I didn't stay in because of that, and this is added to the list now. That was one of the reasons that I ended up getting out, but there were multiple reasons. I was just in my head. I should have walked away from the charts in that situation, but I didn't. But let's go ahead and get to it. I recorded a commentary before exiting the position and was really afraid of losing the position for two reasons, which I just mentioned. The first reason, this actually really stung. It closed exactly how I wanted. The day closed exactly how I wanted, with bearish closure through an identified H1 level. Even though the trade is not done, I now know for certain I would rather take the pain of a loser than to dwell in the pain of a missed opportunity that I just didn't have the stomach to stay in. Now, the reason I didn't have the stomach, that I was struggling to stay in this position, which one is this? Execution, yeah. So the reason I was struggling to stay in this position, because I added here, right? And this is what's awesome about this trade, or in these type of trades. First of all, it started off as a JCP setup, and we got an information here, and entered my usual setup. Now, the original target was this low here, but as price scaled down, I saw, okay, we could get some aggressive price movement, and I know on our larger time frame, I believe the weekly time frame at the time, I'm looking for this liquidity pool below the weekly level to be hit at 94.95. Right, that's why my target's 94.94. So I entered there. I took my, I believe on the close of this, I took my target off and extended my target down to here. Or I didn't extend my target yet. I wanted to see how price reacted around this area to give it a chance to say, okay, if we're going to break through, I want to go ahead and lock in my target here. If we fail this area, I'll go ahead and close my position. That was my plan for that situation. Price closed through, but it closed through timidly. And with that timid close through, I was like, okay, cool. Even though, because it did not fail, right? Because it did not fail this level, it closed through the level. I moved my target and locking it in here, and I went ahead and moved my stop to that level. Now, that was actually after this position got entered. Now, before that, before I moved my stop, I went ahead and setting a limit here. No, that's a lie. I moved my stop after this break. Whew. Okay, let's back up a little bit. Moved my stop after this break below this low, and I went ahead and scaled in here. Since my stop is that low, that offers me an opportunity to scale in, right? And when I scale in, or when I add into a position or into a trading idea, I don't just add the same risk that I put on initially. I add all of my risk back on, right? So if I risk 1% up here, I'm going to make sure my stop loss from this point and my stop loss here adds up to 1%. So if my stop ever gets hit, I lose a full 1% instead of locking in some profit. Okay, and that just offers an opportunity to scale and just keeps the risk that I'm willing to risk. But it has the downside of saying whatever I was initially willing to risk, I can lose that at any point in time in the trade. Right, and when we got over here to this position, which this position was a manual entry, based off DSS, I sent out some details on this over the weekend when I was doing my plan for the week. Going to preempt this level, looking to execute here, but price got up a little bit further, and by the time it was time for me to review or look at the charts in the morning, got a signal here and entered within this candle, within this area. So where complication occurs, and this actually happened over multiple days, right? The first time I started to notice I was getting fearful of staying in this position was around this area, which was the 26th, when price came up close to my stop, which my stop was up here at that time. And I believe I said, here it is. No adjustment to position today. Had internal war with holding all day. I was focusing on the profit again. Don't count your money before you have it. If price aggressively closes below 96.15, on H1 I will just stop above 96.64. Close bearish with trouble looking for D. Okay, and that was the daily review. Which this is how the day closed. Which we're talking about this day here. Okay, which that's what I was looking for on this day. After this bullish day on the 26th, I was looking for price to close bearish, reject that trend line, basically, right? And following day, so we don't have to come back to this. Same thing. I was looking for price to close bearish and actually close below these lows, and potentially make a breakout for this liquidity pool, get down near this area. Right, this one was, believe, on the 27th. On the 27th or 29th, I made that note. Well, this the 27th, this the 28th. So yeah, that's the 28th. Okay, the second reason I wanted to close this was because I had doubt, because I recognize the correlation between EU, dollar Swiss, and dollar yen. And on this actual day of the trading plan I even noted like how unprepared I was with that type of information, right? I have correlation within my plan, but I don't recognize it. Similar to how I don't usually recognize FTAs. Let's not make this too complicated. Here, this is what we'll do. Okay, so daily trading plan. Here we go. Said if all positions hit SL, account will lose 1.5% on the day. I will look for early cuts to minimize losses, but I am accepting of the outcome because I know I'm able to recover from it, which I wasn't. I was. When I wrote that, I was completely accepting of the loss. But later throughout the day, as I saw price move, and then I got more anxious with news coming out and just staring at the chart, which I'm usually off the charts after I complete my daily trading plan and I study something before gathering some stats. All right, so I'm not staring at the charts like that. But this day while I was studying a video, I kept flipping back and forth through the chart. I was like, oh, did it push down yet? Did it push down yet? That type of thing. Because the correlation kind of, recognizing that I was unprepared for the day with this type of information on the correlation, or not confident with the information, right? Like I understand correlation, but because I haven't used it or utilized or practiced with it a lot, kind of gave me doubt in my decision making throughout the day, right? So I went ahead and added that to the daily plan sheet. So let's X that out. Now, we talked about how I executed on dollar Swiss, and let's talk about how I'm supposed to execute on dollar Swiss in this situation. So throughout this trade, everything was perfect until this last position, right? I managed it absolutely perfectly. I set my limits where I was supposed to. I set my stops where I was supposed to. I didn't rush anything. It was really, really good. Really good. And on this position, really just staying in drawdown within this trade is where I got kind of worked up. I stuck to my plan here. I didn't do anything. I just said, okay, this is what's happening. I'm not going to do anything. I'm just going to continue to hold because nothing's telling me to do anything at the moment. So when I woke up this morning, I saw that there was a descending channel here, which is one of my favorite plays, but it's a descending channel on a lower time frame, possibly the 15 minute. So that's what I recognize it as. So I was like, okay, we could get some bullish price action here and see price take out these highs here, or this high here. So that's what I was anticipating. But as and that was about at this time here, right? But as durable goods came out, I saw bullish candles form here, just basically exhaustion to the downside and price just before the hourly level, not even at the hourly level, right? If this was at the hourly level, I would be perfectly fine with closing that position, right? But since it's above the hourly level, that I'm not okay with that close of the position, right? If it breaks below this and then fails that level, then yeah, okay, that's reasonable to close. But here it's not. Now, since that level's not tested, the next level where we could, the level where I would say, okay, this is wise to get out, is if price breaks above this level here. And that's because there's a zone right above price, this zone here, where price is reacting. Price is testing that area several times, okay? So my stop should not be in that zone, similar to how I talked about on Euro AUD, just on the long side. Same thing, I don't want it in the zone, I want it outside of the zone. Candle where bears overtook buyers before continuing down or breaking through a level, right? And that was this candle for me. And then and I was considering closing here. And at this point, this is where I saw the rejections on Euro EU and dollar yen, right? That's where I saw the reactions there for me to exit those positions. So because FTA was hit on EU, I closed that position. Because I wasn't getting the price action on dollar yen that I needed to see off the JCP setup, I closed that position. So I'm in the mode of cutting positions now, right? So I was like, so I cut those two positions. I know they're correlated. Maybe I should cut dollar Swiss now, because I know Euro AUD is like moving, Euro USD is just moving very volatile at the moment. It could like just spike up. Just because there's a specific movement on a specific pair doesn't mean that specific move is going to happen on another pair that's correlated with it, right? There's a probability of it happening, but it doesn't mean it's going to happen. Until the only pair that gave me no reason to exit was dollar Swiss. Okay? And I have that in the commentary, the video that I recorded, because like I noticed like I noticed I had the potential to make a mistake, right? So I went for a walk, I came back, and I just started walking around just to try to get my mind off of it. I couldn't even finish like studying the video, or I was struggling to finish studying the video, and ended up closing just here a few hours before FOMC statement came out, right? Yeah, so that was just terrible, right? And the thing about this is the opportunity cost that was here, right? Because of those added positions, which I could have got to a little bit earlier. Because of those added positions, we're just gonna go down to the bottom here and do the stack comparison. My risk was never above 0.1%. Okay, and if my math is on this is wrong, please go ahead, correct me in the comments. Help me map it out a little bit better. I'd appreciate that. All right. So for this first position, I risked the full 0.5%. Don't want to break it down too much, but 0.5%, and then I was able to move my stop about 1/3 into profit, and then I added another 1/3 here, so that added up to 0.5% for me. So if my SOO got hit, I would lose 0.5%, and so, but I have more size added to this position. And then my stop is in profit around this area, and when this setup occurs, right? So when that setup occurs, I'm able to add. I'm in profit about 1%, I believe, a little less than 1%, right? So I add the 1% profit that I'm in plus another 0.5%, so that my risk adds back up to 0.5% in this situation. So, and this was just the overall plan of what I was trying to execute on within this trade. This was my plan for the trade. And with this added position, I would add it 0.25%. and that adds up to 2.465. Multiply that by the R, that ends up with 46% return over the course of 2 weeks within that position, right? But the risk is never over 0.5%. Now, of course, there's possibility of gaps in the situation. Something crazy could happen and price could gap up, take out my stop, and I lose way more than I expected. But if that doesn't happen, there's large opportunity to scale within the situation, right? 46% gain is crazy, even over the course of a year, and being able to execute off that within 2 weeks off of one trade idea is phenomenal. And the risk in that situation is literally 0.5%. With as far as what's in my control, it's 0.5%. Okay, the upside of that is 46%. If I don't have that added position, it's about 41%. Right, so given that, in that situation, every single time in that situation, I need to be willing to hold that position and be willing to take that loss in that situation. Because the fact that I'm able to add in these scenarios, levels broken, price didn't break above the last thrust candle, and it did it again, levels broken, price didn't break above the last thrust candle, those are signs telling me, hey, you're right on this trade, you're right on this idea, hey, we're going down. Okay, if price is telling me we're right by giving me added positions, giving me opportunities to add to a position, I need to see that idea all the way through instead of backing out of it. Right, so that could be a potential like sign for me to say, hey, you need to have extreme confidence in this position to continue to hold because you have added positions. The fact that you have added positions is the market reaffirming that you're right. Okay, let's continue down. Nothing happened on Thursday, at least no trades closed. Euro AUD, perfect execution on the USS, hit SL an hour before I got on the charts. Got the initial rejection I wanted to see, but following candles continue closing bullish yet. So this was in reference to AUD-JPY that I took at the beginning, or that I talked about at the beginning. So right here, got the rejection at that level that I wanted to see. Unfortunately, like the only thing I don't like about the rejection is that price actually wicked above this candle here, which typically don't like to see that for the initial thrust candle. I actually moved this up a bit higher because in this overall zone, this overall area, price could take out any of those levels, which it did. The overall level I'm talking about is here, right? My fault. Overall level is here. Okay, and it went ahead, took out that level, and even went up to this level. And afterwards, price continued to scale up, just like on USD, Euro USD. All right, so that type of movement, if price is coming back up to that exhaustive level, to that exhaustive area, could be, hey, this potential get out of this trade, or at least reduce size on the trade because it's not giving the reaction that you're exactly looking for in that situation. At least initially it was, following it didn't. Okay, and let's go ahead and see the notes here. Inverse setup, I remember, okay, that was the night before. Setting limit, inverse U, idea was back off. Okay, cool. So next, final trade, inverse continuation of dollar Swiss trade, initially planned and added as an added position to the 3 trades that I had on dollar Swiss, right? So I was going to add again if it broke below, and in the commentary I said, okay, I'm going to hold this position if price breaks above here, that type of thing. I was like, okay, if price breaks below here, I'm going to look for an added position here. And this was the day on the 25th that I saw that. So execution after planned rejection, kept conservative stop loss, looking for price. If price closes below 95.99, I will look to add another position. If price aggressively closes below 96.15 on H1, I'll just stop above 946. Look for this goes, and it looks like I did that again on a different sheet too. Order activated by limit in review. No relevant news candles, which I did in the detailed review above. And I also have a screenshot below here as well. The final screenshot for the daily for all the weeks is right here, which each candle closed exactly how I was looking for them to close. Right? Nothing was violated. Nothing. The market didn't tell me at any point to get out of this position. I was just telling myself to get out of the position. And major reason, like this trade, like I was definitely focused on P&L. This trade could have paid my living expenses for the entire year, right? And that was at the forefront of my mind, and I wasn't really thinking of, hey, if I execute this trade, I wasn't thinking about executing the trade properly. I was thinking of the profit, right? I was like, oh, I have this much profit here. It's good if I close here. I'd rather close here than take the 1 hour loss, or take the 0.5% loss. But if I thought in the grand scheme of things, what's the actual situation? I'm risking 0.5% to gain about 41% at the time. Okay, isn't it worth staying in that position? Absolutely, that's a huge profit potential. Is there anything the market telling me to get out of this position? Not at the moment. Has price violated the previous day's high? No, it has not. Has price formed a reversal pattern? It did form a reversal pattern on the 15-minute time frame, but it's not at a significant level to incentivize closure for that pattern, right? So, no, nothing significant. So this is just fear-based decision making here. But definitely going to stick with me for a while. I know next time I have an opportunity where I'm able to add like that, definitely going to think about it differently, and I'm going to remember dollar Swiss. But don't want to make that into something that's going to negatively impact my performance, right? Yeah, not to get overly confident when I'm able to add to positions, right? Just stick to the plan that I have right now, because we see how it could potentially work out. So that's the week. Hope you guys enjoyed. If you guys have any questions, go ahead, comment below. If you guys saw anything that I could have improved on, and if you saw like any of my math that may have been wrong, please go ahead, correct me on that in the comment section so I can go ahead and fix that. And I will catch you in the next one.